Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you there.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. We hope that you've had a great week and are looking forward to another great show. Tonight we have great, and I love the word great, questions and very interesting stocks to look at, from small microcaps up to big blue chips. And so as usual, we could go anywhere. To continue on from a bit of a theme as last week, we talked about gold stocks. Our topic for tonight is top 5 trading tips for buying the best mining stocks. If tonight's your first time watching, thanks for joining us, and we look forward to you being with us for many more shows, and thanks for making a commitment to learning how to trade the stock market. I'm sure it'll pay off for you in the long run. Well, we look forward to sharing many pearls of wisdom and gems, and that's what you put into the script, isn't it?
yeah, that's what I put in.
That will help you gain better profits from the stock market. So hello, I'm Janine Cox, and tonight I have Dale Gillham joining us. We're Australia's most trusted stock market educators.
I was going to put the great Dale Gillham, but I thought that was a bit over pushing.
That's
great.
a bit OTT.
Too many greats is not enough. It's too much, that's for sure. Hey,
You've got to have a laugh, don't you?
I do. I've got to have a laugh, because, I mean, we're COVID-free. Did you know that?
I know, isn't that awesome?
Victoria, no cases, COVID-free.
Well, I thought you were going to sing the song or something.
I was. Well, in the middle of in the middle of the lockdown, I was going to start writing country songs, because they're all about doom and gloom and your dog's dying and your wife left you and all that sort of stuff. And, well, you know, you're in that sort of mood, aren't you, when you're locked down, you can't do anything. But now the sun's shining, the birds are singing.
I think he's got an interesting perspective, don't you?
God, all right. Anyway, but if you have a burning question for us, you can always send us an email or upload a 30-second video of yourself to Dropbox and send us that link, and we'd love to have your videos. Remember to send all your questions to info@wealthwithin.com.au. Now, before you send in a question, remember you must subscribe to the channel, as we will give preference to those who are supporting us. I think that's pretty much fair. What do you reckon?
I think we should move on. Okay. And it's the 4th Tuesday in the month, and this means that we'll look at world currencies. So let's get into the charts right now, shall we?
Well, we must. That's okay. So okay. World currencies. You want to take it?
No, you can. I think you're itching to.
All right. No, I'm not itching to it. I've just got a scratch. I've got a scratch. Looking at, I mean, obviously on the screen you're seeing our watch list for the currencies here. Now on the top there you can see the US dollar. Our market's really strong against the US dollar since the election. I mean, we've, 12 days since, 14 days since the election, 2 weeks roughly, or 13 days. And you can see how our dollar's really taken off against the US dollar, up 3.7%.
I think it's nice to see it around that 72 cent, 73 cent mark.
72 cents.
Anywhere between 68 and 75 cents. I think the RBA would be reasonably happy with it floating around that zone. But if it starts to edge higher than that, that's where they might look at it. But what can they really do? They've got almost no levers to pull now.
And I was doing my monthly survey for Finder magazine, or Finder, what do they call, finder.com.au, where they talk about interest rates. And so I'm one of the 4,000 gazillion experts they ask about interest rates. So I had to do my...
So your comment matters.
Well, it doesn't matter very much at all, but they were asking about, well, what could interest rates do? And I said, well, they can't go much lower, otherwise we'll be paying the bank to give them our money. But don't we pay the bank anyway? Well, let's go back to this anyhow.
Okay. So look, the Aussie dollar and the Swiss franc, do you like talking about that, or do you want to talk about the Singapore dollar?
I want to bring up a couple of charts, but I'm just saying at the moment, the Aussie dollar this month's looking strong right across the board except the New Zealand dollar, which is probably not quite surprising because the New Zealand market's done really well this year during COVID, and the market's done well. Their dollar's done quite well. It's just coming back to a little bit normal. We're talking about $1.05 if we go down here to New Zealand. See, $1 Australian is $1.05 New Zealand, which is generally, it used to be about $2, $3, sometimes a bit more, but it's pretty stable there. But I want to go and look at the Aussie US, and I also want to go and look at the Singapore dollar, the Chinese renminbi, and possibly the pound.
Okay.
The UK pound.
So let's have a quick look. Do you want short term or longer term?
Well, you'll give me more medium term. How's that? You didn't give me that option, did you?
No, I'm going to give you long.
So looking at the Aussie dollar against the US dollar, and we've seen our market fall heavily against the US dollar right up from $1.10 back in about 2011, right down to where it had that low more recently, if we can see that earlier this year with the coronavirus low, and since then we've bounced beautifully. And really what drives our market against the US dollar is really just demand for our dollar. Now, because interest rates were really low in the US, our interest rates kept dropping, and that's why our dollar kept dropping as well. But and we weren't getting the investment coming in. So right now I think our market's looking good against the US dollar. But looking at the chart, what do you say?
Look, I think that rebound out of that low indicates that there's a long-term low that's come in there.
Yeah, there is, and that's what I'm saying, but I'm not seeing a huge big run like we saw right up into 2011 happening,
Well, it's early days yet.
Yeah, so it may, but when you're looking at this, if we put on this, you can see most of the movement is under that sort of 75 cents on our market going back 20 plus years, 30 years there. So really what we're seeing is there could be a bit more movement in our market up to around that 80 cent mark, but right now it still needs to be seen whether that's going to do it. And we also need to get above these sort of more recent highs from the last few weeks, which is that high there at 74 cents, but it's looking good.
Yeah, it is looking good. I'd still like to see it come back a little bit more. It may not do it though.
So let's move on to another one. Do you want to bring up another stock? You've got the mouse there, so you want to bring on another stock. Do you want to bring up one of the other ones like the pound sterling or?
Are you saying you're handing back control again?
Yeah, look, I'm letting you have control tonight.
All right.
Actually, perceived control.
What about the Australian versus Singapore dollar, given we were having a chat to Michael Waits today?
No, we can do that.
Who's in Singapore. I think let's just have a look.
No, actually, Michael's in Bangkok.
Oh, it's Bangkok.
So it's the Thai baht.
Right. Okay,
yeah.
I forgot. Okay, so looking at Singapore, what do you see?
Okay.
Pretty much
I
the
think
same
it looks pretty
short
flat.
term.
Yeah, it looks
sideways
pretty flat.
move.
Yeah, it does look pretty flat, doesn't it, the Aussie dollar? Because we don't have a huge trade with Singapore, do we, really?
Well, look, I mean, I don't really track or follow this one, so I just thought you might.
Okay, let's have a quick look at the FTSE and then before we move on.
Yep. Okay, so let's have a look at the British pound.
And again, it's still the same, isn't it? It's not looking really, really bullish. Even the UK market's been weak. The UK stock market's been weaker around world markets.
Yeah, I think it's pretty much the case across the board. We're seeing this sideways action happening with the Australian dollar. So, around that 55 cent mark, historically, I think that's where it wants to sit. Have a look at how many times it's traded around that level over the past, 8,
so what's going to drive our Australian market? Commodities?
Commodities definitely.
Start driving our Australian dollar.
That's always a big driver for us, but not necessarily the relationship between the British pound sterling and the Aussie dollar. It's more the Aussie US dollar that's happening.
Okay, so at the moment we're not expecting a lot of movement in the Australian dollar. A little bit up, but maybe not too much more.
Yeah, look, I mean, for Australian dollar, British pounds, if it goes through that 55 cent mark or 56 cent mark, I think it could be a big move up, but it's got to get through that level before we're likely to see that move happen.
All right, well, that's our take on the currencies, and but let's get on to, or before we get into our first viewer question, I really want to thank all those who sent in their emails to us. We really do appreciate it, and we're getting some great emails nowadays as well, thought out ones, so please keep up the effort, everyone, and because the more you ask, the more you explore, the more everybody can learn. So that brings us to the first question. Janine, what is it?
All right, we have a question from Simon. Hi Dale and Janine, watched your show quite a bit this year, wondering about a long-term hold on logistics companies, especially now coming out of COVID or possible entering another phase. Your thoughts on QUB, please. Yours sincerely, Simon. Thanks very much, Simon. Interesting stock choice that you have there on QUB. I think it looks quite interesting, quite nice from a more medium-term perspective, given it's taken out that high now. It really needs to stay above $3. At the moment, it's struggling to try to do that, but it looks like it's poised to push higher. We just have to wait for that confirmation because, look, when stocks break out of these sideways moves, they can often come back within the range of previous bars traded because, as you know, quite often the buying and the selling shifts, so you get the buyers drying up and then the sellers come back in again, and then when it drops people who are thinking, oh, it's dropped back below $3, I might pick it up now.
Yeah.
And that holds it up.
Well, it is. I mean, obviously, Cube is, ports and all sorts of other stuff. It used to be Patrick's back in the day before it changed its name and everything else. But you wouldn't think with our trade situation at the moment, it would depend on, is the economy going to pick up? Are we going to get out of a recession? Are we going to be spending a lot more and obviously having more imports and doing more exporting?
Well, anything with logistics or transport is going to be tested right now, but it should be in a good position, because if you think about the energy costs at the moment, they're quite low. But then I've spoken to a lot of people who have struggled with different modes of transportation, goods being transported in recent times. So I'm just wondering, I haven't looked into how Cube's actually handling everything that's gone on with COVID, but from the share price, it actually looks like, from a technical perspective, that it's actually recovering quite nicely. It's not much different from our market when you look at the overall market unfolding, and I guess that's the yardstick for me. I look at the stock price, see how it's comparing to our overall market's recovery, and then see where that is in relation to where before COVID hit, to really gauge what's happening. But like I said, it needs to hold above $3 to confirm that it's going to continue up, but it looks good at the moment.
Cool. All right, now we have a question from Jason, who says, hi Dale and Janine, I've read Accelerate Your Wealth and am halfway through How to Beat the Managed Funds by 20%. Fantastic. It's great. Okay, well, thank you very much for that. Using what I'm learning, my question is on AGL. Their earnings have been increasing since 2016. They have a 7% yield and they are in the top ASX 50, but their share price has been dropping since May 2017. From reading your book, I think this one is that I put on the watch list. I would love to hear your thoughts and Janine's point of view, good or bad. I'm currently halfway through doing a diploma in financial planning. Oh, fantastic. And soon would like to do your diploma course after I've finished. I've been trading on the share market for 3 years now. You gave me this because it's a long one, don't you?
Yeah,
I've been trading on the share market for 3 years now, first with fundamentals, but now a lot more with technical analysis. I think it helps more with knowing when to get in and out on trades. Better regards, Jason.
So there's two parts to this, and the reason I decided to put both in is because I think there's some relevance. First, AGL's an interesting stock. We've had a few questions about it.
Sorry, I'm not supposed to say that.
Yeah, but it came up because it's a potential opportunity down the track, because it came up as part of our energy and sector analysis, or because we're doing this whole thing on mining at the moment. So that's one thing that we looked at, or utilities. And so when the next part of his questions is, or it's not really a question, but it's more about him having studied the Diploma of Financial Planning. And we do get a lot of people coming through our courses that have done the Diploma of Financial Planning. And I can remember one of the ladies that came through with us, and I remember actually doing a presentation for the financial planning firm years ago, and when she decided to do the course with us, she said the difference that it made in terms of the dynamics at her workplace, because she was actually able to see so many things about stocks and make comments to them, like why would we put clients' funds in that stock, for example. Just having a different perspective than what the other advisors had, and often men who were older. So I just thought, and she actually said that it did give her a whole different way of looking at the world.
Oh, it does. I mean, a lot of times when I get people doing a diploma of financial planning, and it's possibly the same with this gentleman, is that they do it thinking they're going to learn how to make money on the market and invest, because that's what you go to a financial planner for. But going through the course, you realise all you learn is about product. You actually don't learn how to do something.
But I think it's changed now since the GFC. They've actually made it a lot more involved, right, in terms of doing that Diploma of Financial Planning. But it still doesn't teach you how to. It doesn't teach you how to be a trader.
No.
And it's not.
None of it does. We've had lots of people who've done grad certs in applied finance, bachelors in applied finance, people with CFAs. And in fact, the CFA, if you're not sure, is called a certified financial analyst. It's a very high qualification in the US that people do. So your big top fund managers and your big hedge fund guys have CFAs in there crunching all the numbers. Now, I was sitting having lunch with somebody who's in his second year of CFA only last week. And he's done some of our education, and he goes, Dale, the difference between what you teach and what I'm learning in this really high course is You teach us how to do it. They're just teaching us a lot of stuff that's not really relevant to mum and dad.
That's
So a
what
lot
is it?
So a lot of, yeah, well, not necessarily a lot is, but it's more relevant to the big fund end of the town. And so this is where I'm saying is the financial planning and other degrees like grad certs in applied finance are very much for the big end of town, but it doesn't translate to what you would do as an individual investor very well. And that's really where people love our course, because they move into it and they finally understand how to do it. It's about like getting your hands dirty and actually working it out.
We've also had some people too who have said that it's our course has given them the edge because other people didn't have that qualification when they went for jobs.
And they've got jobs, correct. Absolutely correct. But let's have a quick look at AGL, because we did look at it last week.
Long-term downtrend, still in place. It's only been up for the last few weeks, so that doesn't tell you that it's turned the corner yet, but I think it may have. However, I've still got to wait for that confirmation.
Yeah, well, yesterday when I actually looked at this stock yesterday on my market report, and I said I do like it, but put it on the watch list.
Didn't someone tell you in a chat somewhere that was in
somebody
one of
else
our
told me it
messages
was going up, but I'm not sure how
we're
you could
struggling
figure
to
that
see that just yet. And even if they're right, like I'm thinking the bottom's here as well, but I'm not. You don't jump in and catch a falling knife when it could just turn around and go the other way.
It's
so
definitely not confirmed.
There's no rule there.
So me, a buy signal will be somewhere between probably 3 to 6 weeks or 8 weeks away, possibly.
Potentially.
Yeah.
Okay, the next email that we have is from Enrique. Hi Dale and Janine, any thoughts on WTC? Oh, here's one for you. The weekly chart shows that the downtrend line has been crossed, but I did not get in until the breakout at the resistance level. I got in at 32.06. Love your opinion on the stock. Thanks. Okay, Enrique, good question.
I've been looking at WTC a couple of times. It's not a bad looking stock, actually.
So 32.06, somewhere around here, is it?
Oh, that's 32.20, just a little bit lower than that. 32.08,
so it's broken up through this level and taken off. And look, it could still continue up, but let's just have a look at how much it's got to go towards that all-time high. So from 32.06, I just want to bring that down, potentially around 20% to the high. So there's still potential there for the stock to rise. You've always got to be watching out for when they're getting close to those all-time highs, because they can turn. But you probably get a trend line up underneath that as well, because there's a nice trend up there, and I need to get this crosshair off, otherwise you're going to tell me off in a minute.
Probably. That's my job.
Okay. So look, there's a nice trend up there. It looks really, really strong.
I liked it short term. I didn't like it more longer term. I think it's going to run out of steam soon.
When you say short term, you're talking a few weeks from
I'm
here?
just talking a few weeks, So that's what I thought it was. It looked good short term, but I like other stocks more medium to longer term than this one. I think this one may find some resistance in the not too distant future. It's having a few down days at the moment, which is not unusual because it did spike pretty quickly over a few days there.
Yeah, look, it's gone 1, 2, 3, 4, 5 days down. 1, 2, 3, 4, 5, 6 days down.
So yeah,
and at the moment it's not going anywhere.
And it's got a lot of indecision there at the moment. So that's why I thought I looked at it when it broke up through there and that level, and I thought, I've got better options.
Yeah, well, if it goes above 32 is entry price again, then it could take off. It's just waiting for that to see if that happens, and then making sure you've got the downside risk with a stop loss.
So I do like it. I just say I'm just a bit more short term in my view, not more so medium term. But anyway, but it does look good. But thanks for the question. Now the next question we have is from Daniel, who says, "Hi Dale and Janine, I have a holding of a microcap mining stock AIS bought at 4.4 cents. I initially bought this stock based off fundamentals and further growth. Looking at the charts, I would appreciate your thoughts on the direction it's heading. Cheers, Daniel." Okay, it is a micro cap, isn't it?
It is, and look, it's flatlined if you look at the whole history of it. But more recently, it's trying to come up off the bottom at the moment, isn't it? So it has bottomed out quite strongly down there in 2015-16, I think it is, 2016. And it's come back to test that. At the moment, it's moving up nicely. So, the trend is there on the weekly chart. It's in a trend, which is good to see. What are your thoughts on it?
I don't know. What's the volume on it? So, I mean, it looks really nice at the moment, although I suspect, it's
a high risk.
It's a high risk stock, but if you're looking at the volume there, 1,800,000. Now, get your calculators out, everybody, or your iPhones out. Get your calculator out and multiply
1.85 million.
5 million times 0.7 of a cent, and then sit there and go in shock. Most of us would have the money to move that stock.
Is it 7 cents? It's 7 cents.
It's 0.7 of us. It's 7 cents.
Is that okay?
It's 7 cents. So it's a few $100,000 it's been traded on any one day. So that's why it's a liquid stock, and that's why we talk about it. So it's really easy. These sorts of stocks are very easily manipulated, and those in the know and the big end of town, meaning it could be big shareholders, they will push stocks like this around.
So 8% up in a day on that occasion, and on the downside, it's probably the same or more volatile.
I like it, but you're in profit, so just my suggestion would be made is just to make sure you've got an exit strategy underneath you, because when it does fall, it probably will fall quite quickly, and it'll take a lot of your profit pretty quickly. So, but right now, stay with it while it's going up.
All right.
Okay, my question again: how do I get two in a row? Jeez, you can give me the tough questions. We've got a question from Kevin who says, "Hi Janine and Dale, my question for you is about Split IT, SPT. 2 months ago at $1.55, it's now trading at $1.30. It's now at my sell plan or Hooey's rule. The trend line indicates a downward trend, and the company has just issued 4.5 million unlisted options. Not sure what effect this has on the stock. I'd love to hear your thoughts on this company for me. Cheers, Kevin."
Yeah, so look, I mean, it has slipped. If there is a uptrend line in there possible, it may have slipped below that line if you could get one up there. But it's much harder to get trend
that would
lines
be very challenging
in place when you've got such small dollar value stocks. It's really challenging to do that. So if you're wondering why I put you up for this question, it's because of the liquidity of it. And you talk about liking some of these micro caps. So I thought, all right, you talk about it, so I'll let you handle it.
I mean, we just talked about it, but you've got 11 million shares at $1, so it's more liquid than the other one. Now, this is probably a good question, though. I mean, I know a lot of people, and I've had somebody last week said to me, "What? This share's traded at 5 million shares. That's got to be liquid, doesn't it?" And I said, "Does it?" And they looked at me and they said, "Well, what do you mean?" And I said, "Well, I could be buying 5 million shares myself. That's it. And that could be one person buying 5 million shares." And they went, "Yeah." So I said, "Is that liquid or illiquid?" Just because I bought 5 million shares. Or
there's no market.
Yeah, or it could be 5 million people buying one share. Which one's more liquid? And it's always the second one. Because if I'm the only buyer and I'm buying all the shares and I don't want to buy any more tomorrow, who are you going to sell to? And if I'm the only seller, who are you going to buy from? If you tried
to buy them, you would probably ramp the price like we've seen on the chart there.
Yeah, so so when you're looking at liquidity, everybody, it's not just about what you see in volume, it's about how many people are actively transacting in that stock as well. Now, the question they're going to ask us next week, which it's not possible to answer, is how do you know that? How do you know how many people are participating? And the only way you can figure it out is to know the course of trades in the ASX. And it used to always be in the financial review, and it's not anymore.
Look, you don't need to know that.
But you don't need to know that.
No.
The chart tells us a lot.
Yeah, just looking at the liquidity in terms of, the value that's traded.
No, I was going to send everybody looking at all the newspapers trying to find it.
Yeah, that's what people used to do to us when people first started in the stock market. There were things that they got you to do which you just did not need to do.
Like left-handed screwdrivers.
Yes, that's happened to me when I've started out in my career many years ago. So look, so SPT, I think it's broken on the downside of this sideways move that we've seen over a number of weeks, and it really has to get back above 140, 150 to confirm that it's not going to fall further, because it could.
Okay, cool. All right, as I said, I don't mind at the moment. I just want to make sure he's already down 20 cents, which is enough. He said it's hit his exit strategy. So if it's hit your exit strategy and it has actually triggered your exit, then you just need to exit. That's pretty much what it is. And I know traders sometimes say, "Hey Dale, this stock's triggered my exit, what should I do?" And the only answer you'll ever get from Janine and I is, if it's matched your rules, then do what your rules say. So please do that. For those of you, we've had a few people mentioning my book, and we had a few more emails again this week about my book. I do have 2 books. This is my first book, and that's the one that you can get for free. You just pay the shipping. Our girls are wearing their fingers out, sending them out for everybody wanting them for Christmas presents. Just go to the homepage on our website, go up to the top, click on the special offer. Don't try and get it in the bookshop. It'll be a different price. So on the homepage. As I said, just pay shipping and you get the book for free. So have a good read of it, and really it will help. It will change your life and how you invest, and help you get more solid analysis underneath what you're doing, and then give you a lot more structure and strategy so you do profit more. But I think we need to move on now, don't we, Janine?
Yes, we
If that's
definitely
enough for me,
do.
talking about my book.
I hope that you're enjoying the show so far. We've been enjoying listening to Dale.
I think everybody should buy 3 books.
Before we get into the rest of it now, it's a perfect time to hit that subscribe button and also like the video. So go ahead, be my guest, and please do. Now, tonight, I think it's time we get into the topic now, isn't it?
I hope so.
So
I'm waiting for it.
Yeah, you're hanging on the edge of your seat. 5 top trading tips for buying the best mining stocks. Now, there are signs that the next phase of another mining boom is underway. Remember, when people talk about a lot of negativity, then often there's a lot going on behind that they don't want you to know about.
Sorry,
and so there will be opportunities to profit if you have the right knowledge, and put this into practice to develop your skills over the coming year and beyond. Now, mining stocks all have a personality, just like you and me and this man sitting next to me.
Like me, they can be quite volatile. Right? Is that what you're telling me?
So they can be challenging to trade. However, their volatility also makes them some of the best stocks to derive an income from when trading the stock market. Now, mining stocks are also very cyclical, right? So what does that mean? We can talk about that soon, and can move quite fast over short periods. This is part of what attracts traders to them. And these same traits also mean mining stocks are very risky, especially for those who have not been trained properly. So tonight we want to discuss 5 top trading tips that you need to be aware of when trading to select stocks for your watch list, or start to trade the best mining stocks. Because the more knowledge that you have, the more you learn how to develop your skills, and the lower your risk, and of course the greater your probability of making a profit. Okay. So shall we get into it?
I'm ready. I'm revving up for it. Yeah, go for
it.
Oh, so it's me again. I thought you were going to show me some charts. That's what you said. First up is charts. But anyway, firstly up, we're going to be talking about mining stocks tonight. So why not some other sector?
Okay, good question.
I know, that's why I asked it.
Well, look, I guess it's because we've got to be consistent with what we've been talking about on recent
gold
shows.
stocks last week.
So we're talking
energy
about
stocks the week before.
Yeah, but we're still talking about mining as a big picture perspective. So all of these are part of that, the group of shares that fit under mining shares.
Can I also explain a little bit more?
Yes.
Okay, in the US, S&P 500, what drives that?
The S&P 500?
Yeah, in the US.
The big stocks.
Yeah, but what type of stocks are they?
Well, there's a lot of tech stocks that drive it, so about 23% of the market.
Yeah, so some of our big stocks, our market's much more financials and materials and mining.
Yeah, so if around 30% of financials, and then there's a big weighting to materials and energy, like as a group, because energy is a smaller one. But
yeah, it's a smaller one, yeah.
But as a group, so then you've got the bulk of the market in those two, pretty much in those 2 areas. And let's face it, that if mining stocks are doing what they're supposed to do, then the financial stocks will be benefiting in some way, because the financial stocks have always got their fingers in different pies, haven't
Correct.
they?
Yeah.
Yep. And they've got to raise capital.
That's why our market's been a little bit subdued this year, because of financials and mining stocks have not been performing as well.
This is not the first time we've seen that happen, of course, not just because of COVID. We've seen this happen. You know, we've talked about the 2-speed economy in the past before, where we've had mining and financials taking the back seat and the other one leading, the other one lagging. So often they'll swap, but sometimes when they're moving together, that's when we get the biggest moves on our market, and that's why it generally goes up the most.
Okay, so what we're going to look at, we're going to look at the charts now for start off.
Yeah, so we've got, first of all, we're going to have a quick look at the sectors. So you can see there that energy's still going up. So for the week, we've got the energy sector moving up, materials is going up 2.4%. Now, these are all moves off bottoms, right? So we're talking about long-term opportunities, medium to long-term opportunities that are off these sectors, which means there isn't a rush to get in at the bottom. Because often the bottoms are where these sectors particularly, that can be very volatile, will be quite volatile and will whip traders in and out.
Which is why we said to wait on AGL.
Well, that's a classic reason, one of the reasons to wait on that type of share. But looking at, so if we're looking at these 2 sectors across here, you can see materials, if it's up for the month, let's just have a look for the year to see where we're at. So we can see energy still at the bottom, down 28, so it's still got a fair way to go. Utilities is down 14.5, so You know, these sorts of areas, energy, utilities, materials.
I mean, it's only up 4.9 and it's up 3% this week.
Yeah, now the average moves on stock markets tend to be around 7% over time, but that can vary depending on where you start, where you draw the line in the sand. Because you could, if you're talking about, you know, the low in 2003 before the ramp up in the GFC, and you were comparing that to where the market is now, that's one thing. But if you're comparing the 2006 or 2007 where the market was versus where it is now, that's a whole different return, isn't it?
Yeah, correct.
So it really is about a starting point as well in the whole scheme of things. And I think, you know, that's why energy, utilities, materials are all positioned well going forward over the coming years, I think.
So is now the time to get into the tips?
So look...
Not yet?
I think we do. I think this is the starting point to move into the tips. So now let's run through our top 5 tips for buying the best mining stocks. And to do this, that we'll use 2 mining stocks to assist in illustrating what you need to know.
Okay.
Can you imagine what those stocks are right now?
I'd say, my guess, knowing you, BHP will be one of them.
Yeah.
And the other one will be some stock I've never heard of in my life before.
Okay, because we want to have a look at... I haven't picked a bottom dweller, which you're probably surprised at. Okay, but I've picked a more volatile share.
A more volatile.
Yeah.
Okay, I don't like bottom dwellers.
No. See, BHP is an interesting one because it bounces around a lot. It gaps because it's trading on more than one market. So you've got that shift happening in overnight markets. So the first tip we've got is understand the personality of the stocks that you intend to trade, because everybody's looking for the next big winner and they're forgetting about really understanding the share that they're trading. So how does it move? How volatile is it? How liquid is the share, as we were talking about before? And match this information with your level of experience in the market. So, you know, for example, like why would somebody trade one of those little microtech stocks if they'd never learned how to trade properly? You just wouldn't.
They're gambling.
It's high risk, yeah. And why is this information important? Well, the real answer to this question is simply that you'll significantly reduce your probability of making a return from the shares that you trade if you don't know the answers to these questions. So that's the reality of it for traders. We see the statistics all the time. We get told by brokers what happens to people when they open their accounts and how long they're in the marketplace for. So I think we should have a chat about liquidity and volatility on these stocks.
Yep, we should do all that sort of stuff. So let's show them what we mean by liquidity and volatility. Before I just explained a bit about liquidity, so it's number of shares being traded and the number of participants, or the activity there. Is it freely traded amongst multiple different parties? Because I know if you're in a house auction, you know, and you want to buy the house, you want to be the only person at the auction bidding because the buyer's going to come to you.
Yes.
You don't want to be there against 1,000 people.
Yeah, so what you're saying is you don't want liquidity in the market in a property sale. Is that what you're saying?
Well, you don't want that to buy the property, but if you're the seller of the property, you want 1,000 people there all bidding against it because you get the best price. So, but at the end of the day, somebody gets it.
But when you're buying in the market with stocks, you need buyers and sellers, otherwise you don't have that liquidity.
Yeah. And you can generally tell that when you're looking at the bid and ask price, which you look at the depth of the market and you'll see the bid and ask price. If you see a big spread between those two, you know it's not very liquid. Even though it might be trading 1 million or 10 million shares, if there's a big difference between the bid and ask price, it generally means there's not a lot of participation, or the buyers and sellers aren't equal. And when they get equal, then a transaction happens. So that's one little tip.
Yeah, someone asked a question, which I didn't put it in the list of questions for tonight because they had two questions, and one of them was a stock, which I'm always going to go for over a general question. But you know, it was more about people putting I think it was one trade in, or one unit, or $1 or something like that, and they could see the depth of the market, and there were all these individual transactions going in. And how does that happen? Yeah, and that's more the algo.
They're all the algos. They might buy 1 and 2 shares or 10 shares at a time. Always algos running. So just be careful not to get sort of swayed by that sort of stuff. Really do look at the chart and see what it's doing. But on the chart, we're looking at BHP now. Yeah. So you want to talk a bit about BHP?
So we're talking about liquidity. Okay. So if we're looking at liquidity, we can see there that the graph changes at the bottom. We get spike volume in particular points of time with BHP, like you would with any stock. But the underlying volume that we see for BHP is really solid. You know, you're talking 23 million a week traded for BHP, which when you look at the share price of BHP, you multiply that out, it's huge.
It's huge.
Yeah. So you have no issues about getting your stock and then putting it onto the market or buying the stock when you need to. So even if you bought BHP and then you decided to get out of it and sell it, you could do it really easily. And that's really the point, especially when you're learning. You need to be able to, you don't want to add complexities to your trading that you don't need to. You want to keep it as simple as you possibly can because you've already got complexities, you know, with a mining stock, you've got all the underlyings with the mining stock. So things that can affect a mining share are
exchange rates,
interest rates,
commodity
prices. You've got all of that, as Dale's saying, you know, affecting the share price. Plus, you've got issues to do with mines, shutdowns, anything that can happen, geopolitical issues that can occur to affect the company.
I'm feeling depressed now. I don't want to buy a mining stock after all of it.
But that's why you don't need to look at all of these things necessarily when you're starting out, but you need to have an awareness of what affects the share price.
Okay, so let's move on because we've got to show me your other stock and we've got three more tips to do.
Yep, so we know that BHP trades and it actually can trade and trend really nicely. So can we just look at that quickly?
No.
See, there's a nice trend with BHP's share price. Okay. We need to look at this for point of comparison
Beach
just
Energy,
quickly.
yeah, which is a good stock.
Beach Energy is another one, but of course much more volatile. It's a smaller share. I think this has got some really nice opportunities in Beach at the moment. And you can see how it's traded over the history of it. It's all over the place. But once it gets into a decent trend, you can make a nice short to medium term return from such a share. But it's about getting in at the right time, not trying to jump in at a peak where it's trading, because often you can get whipped out on the moves down. So you've just got to understand how it rises and how it falls.
You've got to have much more sensitive rules of entry and exit on these sorts of stuff, which means you need to have much more knowledgeable.
Well, we're coming to that bit, so you're jumping ahead.
Sorry. So I'll get to tip number 2. Now, when selecting stocks to trade, never buy a share on news, a tip, or someone's opinion. This is particularly important for mining stocks as they tend to be more volatile than most stocks in other sectors and are therefore prone to market manipulation. I'll say that again, market manipulation happens all the time. We're often asked why, after a positive announcement about the company's performance, does the share price fall? That's a really great question, isn't it? We get asked all the time. And it simply is when you want to sell something, at the point of time is when everybody else wants it. So if they put out the best news on the stock, then everybody goes, wow, I should buy that, and those wanting to sell it will sell into it. And they're generally the big players on the marketplace, or the directors, people like that, will downsell into that positive news, and you'll see it drop. And I mean, how many times did CommBank report all-time record profits and fall 25% afterwards? It just happens. And on mining stocks, it happens more because they're generally a little bit more volatile.
Well, not immediately, but over time.
But it does happen. So it really, really does happen. So you've got to be really careful and making sure you're not taking tips off chat forums there. Mining stocks tend to be ramped all of the time in chat forums for people, especially the very low cap ones, the ones in the cents that trade in cents.
Now, tip 3, if you want to trade for income, less is more. You can make all of your money off 4 or 5 mining stocks, and those who are serious about trading for income know that they need structure and a process to do this well. And this does not mean skimming a few cents here and there, because that's what people do if they don't have solid rules, and trying to trade this way means that you're unlikely to achieve a reliable level of income from your trading. So this is a common thing, isn't it?
Yeah.
And I'd say that when people start out in the stock market, it's about sort of dipping your toe in the water, and people think, oh, I'll just put a few dollars in, see if I can make, maybe $50 or $100 and then take that and then try it again.
They do.
But it's really setting them up for really a bad process.
Yeah, but it's about making money. Everything's about making money at the lowest possible risk and having your money at risk for the least amount of time.
But that's why they're doing that.
Correct.
But it's not the right way, is it?
But they're looking at a lolly shop full of smorgasbords of stocks. So they're scanning the market looking for hundreds of stocks to try and find the best opportunities. And by doing that, they're missing the best opportunities.
Yeah.
They're just finding any opportunity.
Or they might just hear somebody talking about a share and then buying.
But you can't know 100 stocks. I can't. You and me can't know intimately 100 stocks, and with all our knowledge, but we can apply our knowledge to them.
Like, we know what the chart looks like in our head, but in terms of overall, but we might not know all the day-to-day moves.
Correct. So therefore, we put some analysis on it to learn all that. But if we're trading stuff like mining stocks and they're quite volatile, you do need to know them backwards. You need to know when they hiccup, when they're going to go up, when they're going to go down, and the rules around that, and have a solid understanding of what you're going to do. Otherwise, you're going to get it wrong more than you're going to get it right. So that's why we're talking about narrowing your focus to a smaller number of stocks that you know really, really well. And seriously, you will make all your money on those few stocks, maybe 4 stocks, you'll make all your money on them. Tip number 4, if you're serious about trading short-term for income, you need to be really disciplined in your process for determining the right set of rules for a particular stock, and then you must follow through and trade those particular rules. If you are willing to put in the time and effort to working this out, the rewards from trading short-term can be significant. And when we say significant, we mean phenomenally significant. It's about, I always say you need to earn the right to be a good trader, and that means putting the time and effort in to understand the stock and develop the right rules and strategies for that. And then it's just move the decimal place 1 point to the right. If you can make 10% and get that right, then you just move the decimal point 1 place to the right and you'll make 100%. And then move it to right again and make 1,000%, because you can just add leveraging into it. And we've talked about that before on,
when you prove yourself.
on other different shows that we've done in the past, but you need to prove yourself first.
Yeah, I mean, we've just seen some amazing traders come through who are developing their strategies and working out a plan and sticking to it, which is fantastic, and getting the results. So I'm really excited for the group of traders that are coming through, and we're going to be mentoring those 12 new...
Then 10, the 10 ones,
I thought you said you were going to do a baker's dozen. That's what I asked you to do, a baker's dozen.
That's what you said last week, so...
He's doing a baker's dozen.
No, we're not. No, we're not.
All
Tip
right,
number 5.
Tip 5, remember, the higher the risk you take in the market, the greater the level of knowledge that you require to make an independent, educated trader.
Why are you laughing at that one for?
I'm just laughing at you. Okay, so we all know that.
First, can I say something else?
Yeah.
I don't want to interrupt you, but I am. But it's easy for us to say, but what does it really mean? I mean, we often say that you need this, but what does it actually mean to people?
Yeah, look, I mean, I think if you were thinking about your current process and the way that your mindset is now, you know, you blink it, and you might not even you probably know it intuitively that that's the way you're looking at the market, but you really don't know it until somebody opens up that mind of yours and gets you to see in a full, 180-degree view.
Can I ask a question then?
Yes.
Well, actually, I'm asking a question of everybody watching. If I asked you to rate yourself out of 1 to 10 on how good you think you are as a trader, how knowledgeable and experienced you are, what number would you give it? Think of that in your head right now. Okay. Now, compare yourself against Janine. So if Janine's a 10, where do you think you are? Do you still think where you were at that same level or not? Or is Janine way ahead of you? And what I find most often enough is that people overestimate their knowledge and abilities. When we start talking to them, we start going, what do you do? How do you do it? They start sliding down the scale because they have information, but they're not educated. And that's really what we're sort of saying here is you need to have, really good solid rules and experience and knowledge to be able to trade these sorts of stocks. Otherwise, you're guessing a lot more.
Well, you just look at Beach as an example of the way that this stock moves, and it is so volatile. I mean, just look at that weekly chart. It's a classic. You need to have rules to trade this, because 1 minute it could be trading sideways and the next minute it's going up. So you want to be out when it's telling you to be out, and you want to be in there to make the most money when you can.
So that's our 5 rules.
That's it. I thought you were going to say, and do the course.
Well, they can do the course because that's what they should be doing. But anyway, that's our 5 tips. So now we need to move on.
I didn't ask him to say that. Now let's get into some more emails. But before we do, remember to hit that subscribe button now. And whilst you are there, give us a big thumbs up and click on the like button. Now, we've got a question from Peter. Peter says, hi Dale, you often draw momentum gradients on bar charts to represent the medium you expect a certain stock to follow as it progresses. And this is not so hard to decide where this line might be drawn for most stocks, but when you have stocks such as CSL that have a very good rising profit history, how is the average momentum determined? Appreciate your advice, Peter.
Jeez, where's he? I think he needs to give me his credit card and I'll charge him $50,000 for that answer. No, I won't do that. Some stocks, it's a bit harder, and that's it. As you're quite right, and I do it, and I show people doing that on the chart because it's something. How do I say it? It's like a quick and dirty, if that makes sense, without being rude.
So you're not talking about a trend line. You're just talking about the angle of a rise, is it?
Yeah. So let's bring. Have you got CSL?
Yeah, CSL's there. The monthly chart's
I'll put my glasses on so I can see.
Actually, his point was it might not be easy on CSL, but the monthly chart's probably one of the easiest charts.
Yeah. Always go to the monthly chart first, and always bring up all the data. And you can see here that if I drew a momentum line from here, it's probably going to be more flat. But what you're going to do, if I broke this up into, let's say, 3 or 4 sections, maybe of 5 to 10 years at a time or 20 years at a time, you'll see momentum changes on a stock. So if I do this, and we go back, you can do it in smaller bits of time, mate, and that's really what you do. So if I get my little trend line tool...
But it's not a trend line you're drawing, let's make
no,
that clear.
No, it's not a trend line I'm drawing, but I'm just using my tool.
It's just an angle.
So the momentum here is roughly about there on this. And then I go back, and the momentum for this period of time is there. So this is 99 to 2002, so shorter periods of time. But let's just scroll back.
But what are you really showing? Because you're only really showing this as a talking point to show that a stock's been rising at a faster angle. That's all you're really trying to show,
Correct, that's all
it?
I'm saying. What's the momentum? But you can see here, this is now over 2003 to 2011.
But how does that help someone in their trading?
Well, it shows them on normal stocks, like I said, this one keeps changing its momentum. So that's why he's saying it's a little bit harder. So what is the momentum on here? Now you can see its momentum keeps changing.
Yeah.
And
but it's not a rule though.
No, it's not a rule. I'm not saying it's a buy and sell rule. You're trying to give me a hard time.
I am.
You are trying to give me a hard time. Right now, this stock is running quite hard in its momentum compared to what it was. But you would think it would come back to this sort of line. But when you're looking at another stock, you might say, let's say a BHP, go back to BHP, it might be on a different momentum. And that's all he's saying. Some stocks are a lot easier, whereas these big volatile stocks, it's a lot harder.
Yeah, they're chop up and down.
It is a lot harder. But when you're looking at a Telstra, which I don't think we've got up here, real easy to do. And all I'm saying is stocks will move away from it, accelerate from its normal momentum and then come back to it. It'll go underneath it a bit, but come back to it. So that's what he's saying I do on my charts all the time on the Monday
this could be a way that people select easier stocks to trade because it's just showing that something sticks to the angle of a trend and it's more orderly, really.
So keep drawing them, mate. Keep drawing them. The next question we got's from one of our trading mentor students, Caleb. Hi, Caleb. Mate, I know I've answered a few questions for you. He says, hi, Dale and Janine. Would love your input on share buybacks in general. What impact do they have on the share price? I purchased ALD or Ampol on the 11th of the 11th, 20 on whatever what's that day? 11th hour, the 11th day of the 11th month, because it passed 26.65. Now I have a share buyback offer released today. What I don't understand is why I should sell their shares back to ALD at a discount in a buyback when I believe they're going up in value, or am I missing something? I think ALD will continue to rise due to the great EPS growth and undervalued PE ratio relative to the market average. It is an energy stock to boot. Your books and trading mentor course have paid for themselves this year. Thank you. Kind regards, Caleb. Fantastic. That's really good to hear, isn't it?
Look, I generally don't, when they're doing a buyback, often that will prop up the share price.
Yeah, but he's right. But why would I sell them back at a discounted price to them?
Yeah, well, that's a question, isn't it? I mean, it's a logical question to ask. Normally when they do a buyback, they do it over a range and there's a bidding process for it.
But sometimes they also give you an incentive like special dividends or extra payments.
Yeah, you've got to read
the
detailed booklet that comes
otherwise
out.
they're not. Why would you do it? Otherwise they would just do an on-market buyback and just dribble feed them, buy them off the market as they're trading, and they would do that sort of stuff.
I think what's more interesting is it's going to be interesting to watch what happens after the buyback. I'd also be interested to know what percentage of the stock on issue that they're buying back to see how much that's likely to affect the share price.
So why do they do a buyback? That's probably a good question.
Well, look, when there are situations in the economy when companies are actually, for whatever reason, not able to do what they could with their capital to generate a return for shareholders. And so often it's because big institutional investors put pressure on the boards of these companies to do something with that capital management. So if they're not going to invest the capital, what are they going to do with it?
So if they've got a lot of cash in the bank, they can buy back
the stock, and then that helps prop the share price and support the share price.
So it's generally a good sign.
It's usually a good sign, but not always, because I've seen plenty of buybacks where the share price has gone south afterwards.
Can I ask you more tough questions? No, I'm not going to.
But I think it's a sign of the times right now that they're doing this.
Yeah, I think it's good. I mean, there'd be a few companies cashed up at the moment looking at doing this anyway. But great question. Very good question,
we have
Caleb.
a question from Steve. Thanks, Steve. Hi, Dale and Janine. Okay, so now... first of all, there were some comments before this part of Steve's email. So I haven't put those in there, but he said, okay, now that I've buttered you up, lol, what's your thoughts on Blackmores? So I've got 12,000 invested at the buy-in average price of 95,000. So yes, I'm in the red by 2K. This is certainly an example of what you talked about in tonight's show. So that was a previous show regarding dollar cost averages. you're right, it doesn't work as if I'm lucky enough to break even. It will have taken me somewhere around 18 months to achieve that positive, and that money could have been better invested elsewhere. Anyway, I'm thinking the way this stock has trended over the last 6 months, that there may be a chance of it surging upwards if you can reach $86 or so. Regards, Steve. So we're having a good look at Blackmore's there. You can see, I think it looks really nice how it's bottomed off there. I'm liking it, and I think there's some really positive moves to come on this share price over the coming months and possibly into the end of 2021.
Yeah, I think there's an old saying, that you make money when you buy, not necessarily when you sell. So if you buy right, you'll make the money. And I think all you've done is buy at wrong time, not the right time. But I'm agreeing with Janine. The share does look really nice at the moment. At this stage, I think you'll get your money back and you'll get back into profit. So, but again, you need to set some rules around that as well about buying, and need to set some rules around your selling. So you always protect your downside. Now, you're only down about 2K. You said you put 12K into it. So you're down about 2K, which is a little bit more than what we would normally suggest for our stop loss. You're still in it.
But it's his decision to decide what his stop loss is.
Correct.
But now that the stock's moving up, you've got to sort of decide, well, where am I going to cut my losses if it does start to fall away again? Really?
So where would you do that?
Look, it depends on what I bought it at, but if I bought it at $95, well, and I'd be sitting there, I'd still set my stop loss at whatever was a reasonable percentage below that.
Okay, yeah, so that's really what we'd be doing, mate, is when you bought it, but just tidy up your buy price to make sure that when you are getting into the stock that you're getting in at a better place for you. Make sure you set your stop loss. Obviously in my book I talk about a 15% stop loss. I use other ones like a trend line in my book, Accelerate Your Wealth. They're a trailing stop loss, so you can use those as well, but whatever that is. But right now
I'd like to see it go up a little bit more, come back, and after a pullback, a rise again to confirm that.
So don't be surprised if it sort of gets up to about $90, backs a bit, and then goes back up again. So, but look, as I said, I wish you well, and always welcome to ask us another question down the track again anyway. But now we have a question from, I think it's Falzia, that we say that. It says, hi Dale and Janine, I'm looking at buying Monadelphous and it looks to be trending. Would love your opinion. Thanks and regards, Falzia.
Yeah, Monadelphous has just started looking good again after so long. I've had this big pullback.
Wally's been running all right for a little while, hasn't it?
Yeah. And so we're seeing this move off a bottom now potentially. So that's an interesting move there off the bottom. And potential break up out of this sideways congestion that we've seen here. But the volume's dropping. So, that's something that interesting that, you'd have to keep an eye on and see what happens over the next couple of weeks. So I'm looking at the share price. I think this little trend is really nice on the stock.
It is looking nice.
Yeah, it's gapped up, which is interesting. But look, let's just have a look on the weekly. It looks solid. I'd just say have a really good set of rules to trade this. This is a stock that you can actually back test quite nicely and get a good set of rules on it.
You can. This is sort of the darling before A2 milk became a darling, wasn't it? Back about 10 years ago.
Your Monadelphous was talked about. Like there are phases that the brokers go through of talking about a couple of stocks, and that's all they talk about. Yeah, and then all of a sudden they switch to another one. So create another story. The next question that we have is from Simon. Hi Dale and Janine. I'd also love your opinions on Worley. Speaking of Worley, you very briefly touched on it a few weeks ago, and I had bought it on the 15th of October at 10.56 after seeing it slowly trending upwards with a gap to fill. After I bought in, the share promptly dropped around 10% and getting very close to my stop loss, but they have now recovered to fill that gap and more. How do you see this stock carrying on? Thanks, Simon. So,
should I leave that up to you? Because
Simon
you like
says
stock.
Worley. Worley's great, and I think it looks fantastic. Nice. And look, this stock, if you go back and have a look at the history of this thing, having looked at this for so long, I can remember watching this fall in the GFC and then seeing it then decline into this low. Just this amazing pattern that unfolded. It's a textbook. If you do whether you do the diploma and then go on to our advanced course, some of the patterns that you see in the diploma and the patterns you see in the advanced course, it just blows your mind how stocks actually move to these patterns, which make it more predictable in the medium to long term, but sometimes in the shorter term, these mining related stocks can actually take you out on the stops. That's just part of trading anyway. But looking at it now, it looks really good. So we're really excited about this one at the moment.
Yeah, we are, and you're right. I mean, I do like this stock. It looks good. I think, the last few weeks it's gone a bit fast. It's gapped right up pretty fast, so I think you're probably going a bit of a slow
If you're not
down.
in it, it's
if
probably,
you're not in it, it's probably a bit too late. If you need to give it a bit of a break, because I think it'll probably come back over the next 1 or 2 weeks and just ease off. And this is what that momentum we were talking about a bit earlier, because you'll get stocks that'll shoot away going really fast and faster in time and price than they normally would. Then they come back to their normal momentum, but they might go below it a little bit and then they'll shoot off again. But some stocks like a Telstra are quite steady when they run.
Look, I can tell you, if this stock if someone comes out for a bid for this stock to try to take it over, I will be screaming at the top of the hills, because trying to tell the board you are crazy, do not accept any offer for this share, because long term it's got a huge future from a technical perspective. So there's my take on that one.
There's your take on it. Okay,
Yeah.
You're going to tell everybody about our special offer for our course?
We've still got other things to talk about.
Have we? Okay, we won't talk about that. Anyway, we've got a question the next email's from, another one from Caleb. You put a second one in. What do you like, Caleb? He's getting special treatment, mate, because you're a student. And
look, I wasn't sure if he actually wanted us to put this one up or whether he wanted it to be directly. He didn't say not to put it up. So look, he wants us to revisit the portfolio review that we did some time ago. Remember when you put out that question to everybody and said you do a one-off
critique
of a portfolio to discuss portfolio construction? That was one of our topics we did. I think it was last year, wasn't it?
Yeah, we ended up with about 5 portfolios or 6, and Caleb's was one of them. We briefly touched on his, but we really got back into one of them and we sort of pulled it apart. And so, and Caleb in his email said that prompted him to enrol in the Trading Mentor, which is, as you saw, has been a very profitable decisions. And he says his returns have turned around from underperforming the ASX to outperforming the ASX, and such a valuable segment in his opinion. So,
thank you.
What I might do, that if you want me to look at your portfolio, please send it through. Now, before you go, I'm just going to put the stock codes in. That's not enough. I need you to put when you bought it, your buy price, how many stocks you have. So if you've bought 1,000 BHP shares on the 1st of November for $40, I need to know all of that data. So when did you buy it? So what date did you buy it? What price did you pay for it? How many stocks you do have? And put all that in a spreadsheet. I don't want in a Word doc, I want in a complete spreadsheet, because I don't have to do a lot of work calculating things for you. But I will pick one that we'll have a look at next week and we'll critique it. What do you reckon?
But Caleb's come up with the idea, so why don't you look at his?
Well, he can do that anyway. He can send it to me personally.
But you're not going to give personal financial advice. You're just going to
it's just between me and Caleb, because we're mates now. He emails me all the time.
I don't know.
He does.
Thanks,
ask
Caleb.
him.
Look, the final email is from Robert. Hi, Dale and Janine. I looked at gold a couple of months ago and looked at ABC Gold Bullion. Now, we talked about gold this month, and he's given a website there for looking at the price of gold in Aussie dollars and also in US dollars. So after someone mentioned that they had made a lot of profit in gold. And now my overview was that gold in Australian dollars did rise, but it was bullish over the long term, while in US dollars it had peaked in 2011, then dropped off and didn't do much and went up rather sharply. So it's more about the value of the dollar as well, and I'm sure that you've seen this before, but just thought I would share. Well, thanks, Robert. He didn't say that he didn't want us to share it on the show, so I thought we'll bring that up as well, because I thought it was a really good point.
Well, it is interesting. It's really all that question is about is just exchange rates. Really is, because the price of gold is the price of gold worldwide. It's always in US dollars. So then it's just, do you value it in
Convert it back.
Convert it back into your own currency, whatever else. Now, obviously, with the US, with their currency, they just for decades they've just been printing more money. So therefore, what they've been doing is devaluing their currency against gold. Because back when Nixon was president, he uncoupled gold to the currency, so the currency wasn't backed by gold. And so from that point of
Called the gold standard.
They created fiat currencies, and so the gold standard was gone. But from that point on, you started seeing countries really printing money. And the US is king of this. They kept printing more money. So the real value of the currency in the US is dramatically devalued since they did that. And seriously devalued since they did that, whereas Australia hasn't been printing money. So that's probably the main difference from, I suppose, a big systemic risk. But that's until recently, as Janine said, we've had the GFC, so we had to have the quantitative easing with the GFC. So that put us more into debt. we were looking like getting out of that not too far down before COVID hit us, and now we're back into big sort of debt. So that's probably the real difference between gold. Our currency hasn't devalued as much against gold because we haven't been printing as much money against the US. But it's any sort of international investment that you do. There's always two components: the investment itself, whether it's gold or a stock, or whether it's a house or a building or whatever it is, and then the currency or the exchange rates, because you could be making money on the investment, but the exchange rate could be going the opposite direction and ending up your profits, or you could be making double profits. The investment could be going up and the currency could be going up, and you could be making more money from all that. But it does really pay to know, and that's why we often say to people, if you're investing offshore, you really need to understand the currency risk that you're actually taking, because you're adding another layer of complexity to investment, and there's so many investments in Australia that you can look after yourself and make good money on.
Okay, last
Was
week
that a
we
good
asked...
enough answer
Yeah,
for
that's
you?
great, and
Okay.
we've got a minute to go.
Okay.
Last week we asked you to tell us which of the gold stocks we talked about tonight do you think is the best, and we had lots of awesome responses and picked one to read. Now, this was from Francois. Now, why did you pick Francois?
Because he bought me a beer once.
I knew that was the answer. Hi,
and
Dale
he'll
and
buy me
Janine.
another one day.
Thanks, Francois. Thanks again for an awesome show. As always, it's great, filled with great info and banter. Of all the 5, or was it 7, gold stocks Janine had up tonight, that was the previous show, I liked Oz the best, and I had my eye on it for a while and would want to buy this stock if it rises above 1674, as I see a possible entry there. So that's what he's commented on, the Oz.
Oh, so you got to look at Oz for him, or you're not?
Well, we've run out of time now, so we might have to do that on another show if he writes in nicely about it.
Look, I'll answer you, mate, privately. Don't you worry about it. I'll
Well,
look
he didn't
after
buy
you.
the beer for me, he bought it for you.
Okay. Fine.
Tonight's question is, if you had to buy one stock for someone for a Christmas present, what would it be? And who are you buying for and why? Now, that's thanks to our awesome director or producer who's behind the scenes. He's thought of that question tonight, and we like that one.
So which stock would you stuff in your stocking?
That's exactly it. So get typing below and share with us your opinion. All right, I think we've come to the end of another show. Unfortunately, we've got to close up shortly. We hope you've enjoyed the discussion tonight, and thanks for participating. Hope you've hit the like button, and remember to subscribe. Your questions are important, so don't let them go unanswered. If you have a question, we'd love to hear from you. And also, if you've got a topic that you want us to discuss on another show, then send in your ideas and we'll have a look at these for upcoming shows.
Yeah, just remember to hit that subscribe button now and then put your email into us. So, and also like this video. Also remember to share the video of tonight's show on your social media with your colleagues and your friends, because it really does help them, keep them informed, and as participation grows, we can deliver more. And it's a really a reward for Janine and I for putting us effort in, and we'd love to get your opinion on our shows. But as I said, keep sharing it out and we'll keep helping everybody. Also remember to put our show into your calendar, as we'll be back right here on YouTube Live every Tuesday, 7 to 8 p.m.
And make sure that you write somewhere if you want Dale to wear a Santa suit on one of the shows, because I'd surely love to see that.
If I have to wear a Santa suit, you're wearing an elf one.
If you would like to have your question answered on the show, either send your question in an email. Remember,
Jingle bells. If you want to have your questions, we'll give them a priority to all our
I
subscribers.
just had a visual.
You had
Couldn't
a
help
visual.
it.
Okay.
I love that.
Do you want me to finish
and type
this for
Wealth
you?
Within Live in the subject line. So info@wealthwithin.com.au is the email address. And you must do this before 3 p.m. Tuesdays to get into that night's show.
If you do it before 2 p.m, Janine will put on $1 of these slippers and
Just go ho-ho for me once.
Ho, ho, ho.
Thank you.
We really hope everyone enjoyed the show tonight as much as we're bringing it to you. As always, thank you for joining us. And we hope to see you again next week. For now, goodbye, good luck and good
night.
trading. Stay safe, everybody.